All right, welcome everybody back to another episode of Proof Vision. Great episode today. We had Ruslan, he's the CEO and co-founder of Extended app. So for those of you that are not familiar with Extended, their team is primarily made up of former Revolut team members. So they've got a lot of experience building in fintech, obviously, and in crypto. And I think a lot of people are excited about Extended because of that, that connection and that prior experience. But if you've tried Extended, the user experience is pretty good. They've got some things on the roadmap that are quite interesting to continue to build on that as well. So we talk shop. I mean, we talk about the architecture of Extended. We talked about, the reasons they built on Starknet, which I thought were really interesting. And then, we kind of tap things off with kind of what they experienced on, kind of the liquidation cascade that we saw on the 10th of October and the 11th of October. So we talk about how the app did and, how the protocol performed. And it was a really, really good kind of holistic conversation with Ruslan. So hope you guys enjoy. Obviously, if you do, please like and subscribe. And we'll see you on the next episode of Proof of Vision. Take care. All right, welcome everybody back to another episode of Proof of Vision. Really excited to bring this one to you today. We've got I'll call it a renewal of trading, on Starknet, and the main reason is kind of sitting in front of me. We've got Ruslan. He's the CEO and co-founder of Extended. How are you doing today?
Thanks a lot for inviting me, first of all. Right, I'm doing great. How are things on your side?
Doing great. It's I know it's probably rainy and cold where you're at. It's also rainy and cold where I'm at. So we're right in the thick of it. We're doing well. Yeah. Another lovely day in crypto. I always like to start with introducing yourself. Maybe tell our listeners what was your journey into crypto like. I know, kind of the Extended team's got, an interesting background, prior to kind of coming into crypto native application here, but maybe you can speak to that a little bit. Like how'd you get into crypto? What sucked you into the rabbit hole a little bit?
Yeah, for sure. Look, I've been in crypto full time since 2021 when I joined Revolut, right? Before that, I had some experience with crypto, but purely as a user, right? Essentially just trading here and there, right? When the market was pumping, losing a bit of money, etc., right? But essentially when I joined Revolut, I joined it as the operations lead, right? And basically I was given a choice. Either I want to do acquiring, right? Or I want to do crypto. And the choice was obvious for me back then, right? Because acquiring sounded super boring, right? And crypto sounded super exciting. I decided to essentially focus on crypto, right? So I started off as the head of crypto operations in the Revolut's crypto department. Back then it was a very small team, right? With a very simple product. I think we had buy and sell of 5 assets back then, which was live since 2018. And in 2021, the market was pumping. So obviously Revolut wanted to really double down, right, in the space and expand both the team, the strategy, right, the product portfolio, the user base, etc. And that was basically my focus, right? So I had to define what we'll actually do, right? I had to hire people and then execute on the product roadmap that was agreed. So I spent 2 years there. And then in 2023, I left to build Extended, right? Also, basically, most of the team members who are currently at Extended were my former colleagues at Revolut. So we are a very small team. We're still at 10 people, right? And 8 of the team members, as well as 2 of my co-founders, are my former colleagues at Revolut, as well as I've hired quite a lot of my current team members back when I was at Revolut. Yeah, so that's briefly on my background.
Gotcha. It's an interesting, I think that's why so many people are interested in Extended. Obviously, one of the reasons is, the experience of the team with Revolut, which is one of the, the most well-known kind of fintech, crypto neobanks that exists, right? So you guys have a very interesting background. I'm curious, before we really get into Extended, as you were building your team, as you're thinking about building this product, like, what do you think are some of the takeaways from like that Revolut experience that has really shaped maybe what extended is. Like, what do you think you guys are focused on, and looking to efficiently, I guess, improve with extended that maybe kind of stems from like ideology from Revolut?
Yeah, look, I would say that just in terms of the team spirit, right, and the way we structure work, the way we hire people, right, the way we organize ourselves is. I've basically learned that at Revolut, and there are a couple of key principles, right, which basically we still follow, right. The first one is, and I think Revolut really showed me that it can work well, right? Effectively, they don't care about the past experience of the people, right? If they think that the person is smart, they believe they can put that person on any task and he can accomplish it within reasonable time frames if he has sufficient resources, right? And I would say that basically when I was gathering the team for extended, right, I didn't really care whether people have past experience in crypto or not, right? I didn't really care whether they've built exchanges in the past, right? I mean, obviously that's a benefit, right? But I think the most important, and honestly, that's the hardest part of any business, right? Is to hire the right people who don't necessarily need to have a very specific expertise, right? But they need to be smart, hardworking, right? And consistent, right? Because effectively, in order to build products, build community, users, you have to be consistent, right? You have to be consistent in what you do and how you do it, etc. So that's one of the first things. Like obviously, in order to build an exchange, you also need people with experience in low latency, high frequency trading infrastructure. And we have all that, right? Like our CTO has built, I think, 4 centralized exchanges in the past, including the Revolut exchange. Another engineer who is also a co-founder also has vast experience in building high frequency trading infrastructure back in his previous jobs, right? But essentially, for the rest of the team, we never really prioritized the past experience, right? I would say that, and that's basically the first thing which we've learned, which I've learned from Revolut, and which is helping me till date, right? The second thing is just in terms of how we organize our work, right? I mean, we saw how it works at Revolut, right? From the stage of the ideation to the stage of release, testing, etc., and we basically follow the same principles, right? I think for many teams who haven't really worked anywhere before they started their own company, right? They essentially have to test and see what works, right? Whereas we already knew how it can work efficiently, right? So from the stage when you have some idea, right, and how you scope it, how you build designs, how you interact with front end, back end, how all that works together, until the stage of the release, testing, etc. I would say that just seeing how it is done at Revolut helped us a lot and helps us to move, I would say, relatively fast with the small team that we have.
No, it makes sense. Makes sense. It's awesome to hear, especially because I think building what you guys are building, obviously, which is a perpetual DEX, it is such a the competitive environment in that space is quite high, right? And the quality of projects building in that subsector of DeFi or crypto or whatever you want to call it is sky high right now. I mean, we're seeing Hyperliquid really take off. Obviously, lighter. There's DEXs being built on Solana that I think are trying to, now start to compete, with Hyperliquid. And now obviously you guys, right? So my question is, when you were deciding, to build extended, what would you say is the main thing that you guys want to focus on doing well versus maybe what some of the competitors are doing? Like, what would be your calling card, I guess, with extended?
Actually, I guess there are two questions right here. One, when we just started extended, that was when we started thinking about extended, that was back in 2022, right? And the market was completely different back then, right? So for us, the reason to start Extended was just basically back during our times at Revolut, right? We worked a lot with the partners in the space, and we essentially had a lot of various discussions with FTX, and when they collapsed, that was obviously a shock, right? But basically that led us instantly to an idea, okay, what if we build an exchange which has a comparable product portfolio, right? UX, performance, etc. But at the same time, all the user funds are self-custodied. We as an exchange don't have access to those funds. There are on-chain validations of the trading logic, etc., right? So that's how the idea effectively got started and how we started thinking about Extended. And as you can imagine, back in late 2022, early 2023, right? Like basically there was DYDX and there was GMX, right? Maybe a couple of other products which we don't even remember by now, right? But even back then it was evident, right, that if you take those projects, there are a lot of ways on how you can improve both the user experience, the breadth of the product portfolio, right, the performance of those products. So the opportunity was clear back then for us. And back in early 2023, I would say the total traded volume on Perp DEXs on a good day was probably 1 billion, right? Now we see 20, 30 billion a day. So the market has increased dramatically, right? And it comes both from people flowing into essentially from centralized exchanges to decentralized exchanges, right? We see that the market share of Perp DEX increases, which actually increases the pie and the opportunity for all the products that are currently building in the space, right? So this is good, right? As for the key selling point of Extended, basically our value proposition has never really changed, right? So from the get-go, we wanted to build an exchange with cross-asset collateral unified margin, where essentially the user would have his margin shared across spot, perps, integrated lending market, potentially going forward among additional trading products, right? But basically that's the core of our value proposition. It's like one part of our value proposition is essentially enabling the unified margin logic across a variety of products, right? So currently we have USDC-settled perps, but basically now the first thing which we're doing is tokenization of vault shares, meaning that you will be able to use your deposit into the vault as the collateral on the exchange, right? And that's already with the smart contract auditors at review stage, so we'll release it relatively soon, right? I would say in the next couple of weeks. The next step after that for us would be to support cross-asset collateral margin, meaning that you can deposit non-stable coin assets on the exchange, and then we'll go into spot, basically pushing towards the roadmap and the vision that we had from the beginning. And the second part of the value proposition is that basically we don't control the settlement layer, right? We don't run our own chain, right? All the funds are essentially custodied and secured by Starknet, and I think that's one of the other differentiators that we essentially have.
Gotcha. Yeah. I mean, yeah, especially on the validator level, I think, in terms of Hyperliquid, in terms of some of these other exchanges, that's one of the big ones that I think a lot of people point towards is how decentralized actually is it, and they're kind of marketing themselves as these decentralized, perp dexes, obviously. But you brought up a name there that I wanted to double click on a little bit, Starknet, right? So, Starknet, obviously had a lot of hype, and I think this industry is very fickle, right? Very shallow. Everybody's opinion of a project is basically what's the token doing, what's the token price doing, and if the token's going down, their sentiment goes down, right, on that project, right? And I think that's kind of what happened to Starkware, right, to Starknet. And so my question is, obviously, you guys made this decision, when the market was different, right? Way back in 2022, as you said. But what are some things that you think Starknet provides you guys versus maybe like, Hyperliquid went the route of like building their own chain now, obviously. That has its advantages and disadvantages, in my opinion. But maybe speak about that a little bit, that relationship with Starkware. Obviously, you guys have kind of stayed faithful through all of this, this market, capitulation a little bit. So,
like we've actually migrated to settling on Starknet only in August this year. So we've made the final decision much later when we already knew the state of the market was basically very similar to what it is now, right? But our take on that is very simple, right? As I mentioned before, essentially we don't want to control the settlement layer, right? We want the user funds as well as the validations of the trading logic to be handled on the public chain, right? That's requirement number one. The second requirement is the throughput, which the chain can effectively process, right? And the third one is the cost of that processing, right? And obviously, we also want this public chain to be decentralized, to be trustless, like the tech to be reliable, etc., etc. Like honestly, I think if you have those requirements in mind, you don't really have many options, right, to choose from. And also, if you want to stay in the, let's say, EVM compatible world, right? And essentially for us, Starknet was basically the only logical choice, right? Because we are processing, I would say, somewhere, I don't know, in between 500,000 to a million transactions a day, right? I don't think there is any other public chain which would have been able to sustain that throughput with all the validations of the trading logic, right? Because imagine when the trade on extended happens, at the on-chain level, we actually check that post-trade, the equity of the account remains above the maintenance margin. We also check that for every liquidation trade, as the result of the trade, the health of the account improves, right? So there is quite a lot of compute, quite a lot of transactions which we need to settle on the public chain, and hence for us, Starknet was the most logical choice. That's one reason. Secondly, we had a chance to work with their engineering team, right? And honestly, I cannot comment on how they do go to market or how they position themselves. But from the pure technical standpoint, they are probably one of the strongest team in the space, right? That's for sure. And I compare it not only to Extended, not only to other chains, but also what I saw at Revolut, right? What I saw at other places, right? And they really stand out from the technical standpoint.
Yeah, it's great to hear this because, and I think this is important for anybody that listens to this to kind of hear, right? Because here you guys are, right? You made that decision much later than I thought, right? And it was in my opinion, a lot of builders in this space view what chain that they're going to settle on or what chain they're going to build on as part of their go-to-market strategy in terms of attracting users, right? And so some builders are like, hey, I don't want to go to, I don't know, Starknet or Sui or some of these ecosystems where they think that associating themselves with a specific chain is going to hurt themselves, whereas at the app level, it's awesome to hear that you guys are hey, screw all that. We think the app is going to attract users by itself. We care more about technically how this is going to help us, right? And I think it's important for a lot of people to hear because, again, I think a lot of people kind of, they like to say what they want to say about a project based on its token price, and they ignore everything else, right? They ignore the fact that this tech, though, is very good, and it does exactly what it says it should do, and there's apps that are going to be building on that and leveraging that, right? So I think that's important.
Yeah, I totally agree. Look, I've actually also basically heard that sentiment or attitude from multiple teams that they're basically trying to rely on the success of the chain, right, to push their own products. But I think what they miss is that no chain will push your product, right? If you want your product to be successful, you have to push your own product yourself. That's one. And then the second thing, if you think about it, right, any blockchain is just basically an infrastructure on top of which you build, right? So the value of the chain only comes from the applications, right? And it's a bit weird to effectively revert that logic and to say, okay, if the chain on which we're building is cool, right, our product will also be cool, right? It has to be the other way around. And then lastly, I think what's important is that, okay, we're settling on Starknet, but one, users don't have to interact with it, right? Like as a user, you don't really need to interact with Starknet at all. And secondly is like we're building our own community, we're doing our own go-to-market, we're a completely independent team, right? Like it's just a piece of infrastructure that we're using. Yes, they're helping us with the technical development, which is great, right? But at the same time, that's just basically another piece of the infrastructure on which Extended is built.
Gotcha. No, makes total sense. And again, breath of fresh air, right? To hear a take like that. I want to dive into the architecture a little bit, of Extended. There's a bunch of different models, out there for perp dexes that people have tried. You mentioned GMX earlier, right? GMX is kind of this like, pooled liquidity, on-chain execution. And then you've kind of got the hybrid model, right? Where it's, I think it's off-chain order book, kind of on-chain settlement. Maybe talk about that design choice. Like, what did you guys think that would open up for users on like the user experience side, and just maybe talk about that a little bit.
When we started thinking about it, right, we started off with the first principles, right? It's okay, if we're building a self-custodial exchange, right, what we want to make sure is that one, we don't have access to the user's funds, right? And the second part, which also contributes to the self-custodial nature of the product, right, is that there are on-chain validations of how every transaction is being settled, right? Because okay, like if you have funds inside the smart contract, but you can settle whatever you want, or if you can liquidate whatever user you want, or you can essentially access those funds and amend the state of the contract, right? That doesn't make you a self-custodial exchange, right? So essentially from the get-go, the principle was that, okay, we should have the on-chain validations of the entire trading logic. And I already gave a couple of examples, but basically every transaction which happens in Extended has to follow the on-chain rules, right? If those rules are breached, the transaction will not be settled, right? And then at the same time, the other principle is that if the exchange goes down, for example, I don't know, for some reason, the operator of the exchange, which is us, is not available, that users should always be able to recover their funds, right? So from our standpoint, at least at the current stage, right, these are basically the key principles on which we're building, right? Now, from the safety standpoint. Now, from the user experience standpoint, right, obviously you want to make sure, right, that the exchange is super performant, that it can process a high load in terms of number of transactions, it has a super low latency, etc., etc. And then for our existing stage, essentially the hybrid model, where all the on-chain validation basically is out there and is on-chain, right? And we run essentially a centralized matching engine, right? That worked perfectly, right? Like, and I think there are a couple of other teams which have done a very similar design choice, right? I think essentially our architecture fundamentally is very similar to what Lighter has, right? And we do believe that at least until there is token, right, that model works perfectly, right? Once you have token which needs to have a sustainable token economics, right, it makes sense to essentially decentralize the operator of the exchange, but that's a separate question.
Now you're already tickling me on this one. I gotta ask you about this in a minute. No, it makes sense. Makes sense. Okay, so that's kind of like the execution side of things. Talk about Oracle structure a little bit. So like obviously, a couple weeks ago we had a huge, like the biggest liquidation, in history, right? Across centralized exchanges, across decentralized perp exchanges, obviously. So oracles are very important, obviously, for anybody that doesn't know. But maybe talk about the oracle structure a little bit, and if you can, like shed any color on like how did October 10th and 11th kind of go for Extended? Like how was the exchange operating? Is there anything that you guys saw that maybe you want to tweak a little bit? Maybe talk about that a little bit too.
Yeah, look, so on the Oracle side of things, the way essentially it works on Extended, there are effectively three prices, right? One is the last price. The last price just represents the last price at which the trade on extended was executed. The second one is the index price, right? Index price basically represents a fair price of the spot asset and is sourced by an external oracle provider, right? And the third one is the mark price. The mark price essentially represents a fair price of the perpetual markets, of the perpetual market. And again, on extended, it is purely sourced based off the external oracle price, and extended order books don't have an impact on that, right? So essentially, if there is a price week on extended, meaning that someone has skewed the order book, someone has pulled out the liquidity or whatsoever, that will have zero impact on the liquidability of the users, right? Users are purely liquidated based on the external mark price, right? And extended order books have no impact on that. And we believe that was the right design choice for us, right? At least at the current stage, when essentially we are by far not the most liquid venue, right? And price discovery happens somewhere else. Hence, it makes sense that effectively the mark price represents the external oracle price, right? And I would say that helped us multiple times, right? Including the October 10th, right? When essentially we have not liquidated any user unfairly, right? In the sense that they were liquidatable based on the external mark prices, right? Now, that's on the first question. On the second question, essentially, I think we should have performed far better than we did, right? Because effectively, we went through the highest load without effectively interruptions of the services, but then we experienced the bug in the logic of partial liquidations. There is a whole post-mortem out there, right, on why it happened and what we did in order to fix that. So the exchange was not available for 1 hour, right? During that hour, essentially, the team managed to fix the bug, right? We were lucky that the bug was relatively simple to fix, right? And essentially after that, we shared the postmortem. We compensated all the users who were directly affected by the exchange downtime, right? And processed like all the tickets and tried to make sure that we essentially do the right thing for the community, right? And effectively take the responsibility for our own downtime. But obviously, going forward, that shouldn't be happening, right? Like resilience of the exchange is it's probably the key thing, right?
Yeah, I mean, I think, and it's good that you guys took care of it right away, number one, obviously. But I think people need to realize too that like with these apps, with Perp DEXs especially, like you have to go through these stress tests, every now and again, right? And like obviously there's going to be certain bugs that come up, but I think it's all about how does the team handle it, how does the team implement a fix for that, and ultimately if any users were affected, are you making it right? But to me, like the more of these things that we go through, and I said this not really in like the Perp DEX stratosphere. I think Perp DEX is actually on decentralized rails performed much better than even some of the centralized exchanges, obviously with what happened with Binance and some of that stuff. So it's actually like a pat on the back for DeFi when some of this stuff happens, right? Because you see these liquidations happening pretty much in an orderly manner. You see all of the transparency in the transactions on chain, for a lot of these DEXs, and on the money market side of things, liquidations happen very, very orderly, right? So every single time one of these things happens, it just hardens the resilience of DeFi and like the lendiness, I think, of like the contracts on chain. So it's actually a net positive, even though, I mean, obviously a ton of people got wiped out and it was terrible from like a financial perspective, but from like an infrastructure perspective, I think actually DeFi came out of it much stronger, as a result.
In the longer run, it definitely has a benefit because basically you manage to test out the infrastructure and you make sure that you are prepared for the similar events in the future, right?
Yeah, absolutely. So I guess kind of along the same lines here a little bit, but like, you guys obviously enable people to trade TradFi assets or RWAs, whatever you want to call it, right? So I think you guys have, gold on there. You guys have, the euro, I believe, for trading FX. So you have different assets, right? And those assets off chain obviously have different constraints than maybe like on-chain denominated assets. So you're allowing people to trade 24/7 unextended with those assets. But like, how do you guys manage this when, you're in TradFi, there's like a holiday or there's a weekend, right? Like, talk about that a little bit so people understand, how does the RWA process
Yes.
actually work unextended?
Look, from the standpoint of an exchange purely, right? The fact that the TradFi markets are unavailable doesn't really make a big difference, right? Because essentially, for us to support any asset, there are two requirements on it, right? One, we need to have an external Oracle price for that. That means that the asset has to be traded somewhere at least, right? That's one. And the second one is that the market makers can support it, right? So there are only two requirements. With the TradFi assets, obtaining an Oracle price is relatively simple, right? Like all of the major oracles can now provide prices for RWAs. That's not a big deal. During the weekends or during the holidays, right? It also operates pretty simply. The mark price just freezes, right? And then reopens when the market is open again, right? And essentially during the closure, it just remains flat, right? The tricky part here is market making, right? And that's essentially, I would say, a product of multiple things. So if you have multiple market makers on the venue, and if there is demand, right, during sufficient flow during the weekend, the price discovery can be happening on the venue itself, right? If there is not, and on most of the TradFi markets, like the flow during the weekends is not sufficient, I would say, to essentially enable the price discovery happening on chain, at least for now, right? In the future, I hope that will change. But for now, most of the market makers, right, they just assess the maximum change in the price of the asset, which they expect to happen over the weekend, over the holiday, etc., and then they widen the spread for that amount. Like we actually see that in the past, across all of the TradFi assets during the off-trading hours, the spread was always super wide, meaning that the market makers widened the spreads, right, to reduce their risks. They still allow people to close exposure, to trade if they want, but the price impact will be relatively high. But we see that now for some assets, there are makers who are apparently quoting relatively tight during the weekends, at least on euro, right? And I assume that's just because you can hedge euro on Kraken and on a couple of other venues, right? So it means that there is some price discovery happening as well, right? But from the perspective of the exchange, purely supporting RWAs is relatively simple, right?
Gotcha. No, it's great to hear. Because I think, one of the big topics, you're seeing this with Robinhood, obviously you're making a big push into this, but, in a lot of people's opinion, the next big kind of moment for DeFi in terms of flow on chain is going to be the tokenization of equities, so tokenizing stocks. And with that, I'm sure comes a lot more complexity, but like, how are you guys viewing that, like in terms of...
Look, again, for perps, it's simple. Right?
Yeah,
For perps,
yeah.
you just need an Oracle price, right? The Oracle price already exists out there on the TradFi markets, right? But given that perps are effectively a synthetic product, right? So people just exchange P&L between each other, right? In the nutshell, it is relatively simple to support any sort of RWAs. The question relies more on the market making side of things, right? We're also working to support stocks. Right. Honestly, I think we could have done it much earlier. Right. We would just always have some higher priorities, but I decided that we need to effectively focus on that just because it's so simple to do. Right. And I think we'll do it like in the near term.
Gotcha. No, that's awesome to hear. Because I think like I'm curious to see how it plays out. Like, I think you've obviously feel pretty confident about how it'll play out, but obviously perps don't exist, on that asset particularly. I guess they never really existed on gold or, the S&P or anything else that's been tokenized. But it's going to be really interesting to see, like, once perps are kind of like embedded on these tokenized stocks and it's true like 24/7 trading going on, these market makers obviously catch up to things. More of this trading comes on chain. It's actually going to be interesting to see like the effect on the market, I think, because I don't know that. I think it's actually going to add more volatility to the traditional markets than like normal. That's my opinion, because you're obviously introducing more leverage to the market
Yes.
that doesn't exist currently.
I mean, when essentially on-chain trading has a sizable market share, I agree it will happen, right? Probably will not see it happening very quickly, right?
Yep.
But in the longer perspective, I do agree.
Yeah. So I guess we'll see. But again, the more trading that happens on chain, I think the better ultimately for most people, at least from your seat and my seat as far as that goes. All right, so let's get into the token a little bit. You talked about the token, making sure it's got healthy economics earlier. I know you guys are obviously haven't really announced much as far as I know on the token, but can you kind of talk about the token a little bit? Like, what do you think the utility of the token is within the extended app?
Yep.
What can you tell us about it?
I mean, look, I would say for any token economics, it's relatively, like in the nutshell, it's super simple, right? If you have a product that is being sustainably used, right? And if the business itself is revenue generating, right? It is very simple to make the token economics sustainable, right? So I would say priority number one for us is to build the sustainable business, right? And if that business is sustainable, the token economics will be healthy by definition, right? Because you as the business have resources to effectively support that healthy token economics, right? But effectively, the way we think about it is super straightforward, right? We want to decentralize the operator of the exchange, meaning that there will be validators who run effectively all the currently centralized logic, right? The settlement, the underlying settlement will still be happening on Starknet. So from the security standpoint, nothing will change. But instead of one party running the matching engine, right, like the rest of the centralized logic, you will have potentially at least multiple parties running that, right? And then the value that the business generates accrues to the validators, right? That's one. The second part is obviously as an exchange, right? Like one of the key things which you have out there is like your fee schedules, the rebate schedules, etc., and you obviously link it to the token economics, right? So there is no real, I would say, rocket science in that, right? And there are different ways on how you can implement it, right? So like I can give you an example. Imagine that we charge a taker fee. And whenever a user trades, right, the entire fee that he pays goes to the token buyback, right? That would effectively be a very simple mechanics to implement, right?
Yeah, for sure. And I think you're seeing, a lot of this play out obviously with Hype, with Hyperliquid, they got their token out now. So they're linking a lot of that stuff to the token, right? The amount of rebates that you get, certain perks that you can get, and it's attracting obviously a lot of these HFT firms to take advantage of that, right? And kind of create an environment that can rival, Binance, and some of the other exchanges. So, yeah, I think it's relatively straightforward. Yeah, it makes perfect sense. Let me ask you this, because I know we're coming up on time here. In terms of the roadmap here, or what's happening in the next, I don't know, 3 to 6 months, I don't like to go beyond that because it's forever in crypto. What's got you the most excited, or like what are you looking at that you're looking to your team to really execute on in the coming quarter? To really kind of continue this upward progression that you guys have seen.
Yeah. So look, by the end of Q1, right? Essentially, I want to have, and I will start with the bigger features, right? I want to have spot markets live. I want to support cross-asset collateral, meaning that you can use non-stable coin assets as the collateral on the exchange. I definitely want to support tokenization of the wallet shares, which is basically already and will come out very soon, right? This is in terms of the biggest features. In terms of the smaller features, there are multiple things, right? As I mentioned, we want to support stocks, right? We want to revamp our mobile application. We are in the process of that and should finish in the middle of November. We'll potentially add new order types and just implement user feedback, but these are already smaller things. But the roadmap for me, at least until the end of Q1, is super straightforward, right, and relatively simple.
Awesome. Yeah, I'll be interested to check out the mobile app when it comes out. Yeah, I think the one thing that a lot of apps miss is like that mobile experience, right? So I think like, it's awesome to see that you guys are kind of focus firing on that, especially coming from like Revolut, obviously. You guys you guys have very vast knowledge in terms of making that simple and easy to use. So that'll be great to see. It's been great having you on, Ruslan. We really appreciate your time. I know it's precious these days. I know you guys are crazy busy. So thanks for coming on the podcast and talking shop a little bit.
Thanks a lot for inviting me, right? And thanks for great questions.
Yeah, absolutely. Well, thanks everybody for tuning in. Another great episode here on Proof of Vision, and we'll see you next time. Take care.